Well, hello there, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective. It means each time we're asking ourselves, what happened today? What does it tell us about the coming ones? Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. If you haven't subscribed to the show and you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. As far as what happened today, let's look at the numbers here. You had a kind of a mild push to the downside. We're going to take a look at the charts, and I'll show you why I think it's going to continue. I see that the DAX, the CACs, they were down. Switzerland, dollar. The only thing up really gold and silver and some bonds. So kind of a little bounce in these things that have been sold off pretty hard. Continuation of the trip on the downside, but it's kind of minor losses today, nothing big. But it's the charts that are concerning, you know, if you're long this market, and that is that you kind of got this, this downtrend going on. It doesn't want to stop, and it just kind of bleeds away day after day. And what I'm talking about is, last week, if you remember this bar we've been keying on for a long time, it broke through it, and then you got the immediate attempt to bounce right here, almost got back to it, pulled back the next day, test these lows down here, right? Gets under them, doesn't have quite enough volume. It's a pretty big move to the downside, right, straight away, so you get a bounce, right? There's the bounce. Takes place on the very next day. You get that bounce, but what does it do? It leaves like a hanging man here. That says you're going to continue to the downside. That's exactly what you got today. That's what our subscribers, knew I was looking for. And I suspect you're going to trade even farther down. And why is that? Well, because you've got some ABCD structures to the downside. Matter of fact, you got 3 now. You have one there. You have another one here now that's nested inside this one. And you also have one over here on the weekly. If you pull the weekly over and do it, we've talked about this one before as well, and that one stretches down into that area as well. Now the good part is that you've got support, right? You got ABCD structures to the downside. You got anchored support on the bullish side. This is on the weekly. This usually takes precedence, so I suspect as you push into this area, you're probably going to find some buyers. What else is new, right? Some buyers. If we look at the Russell, because the Russell is the one that's really selling off here. Now the Russell, for a long time the Russell was giving us the best clues. You had a nice big long uptrend, big steep sell-off, spikes right back up there, makes a new high, consolidates, and then spikes back down. If you pull this over and look at it on a weekly, you've got the same sort of thing where you're coming back into this anchored support zone. I drew it just a little too high because it hasn't hit it quite yet. It's a little bit farther about in there. And so as you come back into it, and I don't think we hit it before here, 1206. Yeah, I just missed it. So 1206. So, in neoclassical, there's a rule that says, hey, if you go more than 6 bars after you break out, this was the breakout bar, then the first time back, you're almost guaranteed it's going to be a buy. Unfortunately for the Russell is you actually had test here and here. And so even though it looks like it just continued up, you actually had some tests. So this is going to be the second time, actually the third time back. The third time back, your odds are not nearly as good. And more than likely, you're going to retrace deeper. You're going to go into the bottom of this bar. And so my expectation, if you look at these bars in terms of support, that's right in there. I expect that's where the Russell's going to try to trade to. We could do the same sort of analysis on the other indexes. I'll leave that to you. But you do have continued pressure even in the strongest sector of the market, which is the NASDAQ. NASDAQ's going to try to come back and test swing point lows most likely. If we pull over and look at the sectors, you've got some real damage taking place in the sectors. And if you've looked at the neoclassical model before, and I've brought this up many times in prior shows, I'm going to go to the market trends here. I'll pull this over so you can see it. and then pop it up some. You know, when you have, well, let's talk about it a different way. First of all, what is this? This is, and let me get it on your screen completely so you can see it. So you've got the general market on the top and the sectors and the major sectors here on the bottom. When you look at this chart, what it's telling you is there's different time frames, right? Those time frames usually work this way. If the short term gets bearish and stays bearish long enough, it will eventually affect the intermediate. And the same thing here. If this does that, it will eventually affect this. The other thing that you can look up is top or bottom up. In other words, underneath, well, the highest level is the general market, and then underneath that you get the major sectors, and then under that is the stocks. If enough stocks go bad down here, right, they're eventually going to affect the sectors, which are eventually going to affect the general market. So you can look at it those ways. Well, what do you have here? Short term, you're pretty much bearish across the board. The only thing still holding out are these two things, technology and financials. It happens to be about 40% of the S&P 500, those two. Now, the financials were doing fine until earnings, and now they're selling off. And so it looks to me like you're pretty much stuck at best in this range, and I wouldn't be surprised to see these that are still sideways go bearish and join everybody else. Now, if we do it long enough, that's going to affect these trends out here. Right now, they're still bullish and sideways at worst. If we start seeing these go bearish, then that's much more pressure on this market. We're not there yet. This market can still save itself, but it's slowly deteriorating. And eventually, if those weekly time frames, those bullish retest and regenerates begin to fail, then you're going to see depreciation here in terms of price, and you're going to see more and more damage. So that's kind of a big picture of where things are. You got earnings season, right? Last week got it off to a bad start with the financials on Friday. You had Bank of America today, beats big, barely closes green. You had Netflix after hours, 20% higher. Let's see if Netflix can hold. Right now, they keep selling into these earnings beats, and if that continues, you know, we've got a few more earnings that are going to pop out the rest of this week that are going to be kind of big, and then next week as well. If they keep selling those earnings, this market is not going to go anywhere but down over the longer term. In other words, we're going to see that bullish formation that we've been watching. We're going to see it dissipate and become more and more bearish if, in fact, that's the case. So I'll pull it back here one last time, pull up the S&P. You know, right now, you're still in a position where this S&P can do some good. It's got these bullish retest regens. It's coming back in to test them. If they regenerate higher, then everything's hunky-dory, and we just go on about our merry way. The problem is you got a lot of cross currents. There's still some, you know, concerns about what the central banks are doing, what the currencies are doing. And, you know, we saw that huge sell-off in the British pound, even though it has arrested itself, in other words, has stopped going down. That was a dramatic move to the downside, right? Ever since Brexit, this thing, matter of fact, if we go to the weekly, you can see it. You get the big Brexit move, consolidation, and now a second leg down. If you start seeing fast moves elsewhere in these currencies, in particular, if this dollar, you know, retraces and takes back off, and I'm going to pop the dollar up real quick, that dollar, big fast move up, doing a little consolidation now. If it holds this area and pushes on up to 26 on the UUP, pretty soon we're going to be looking at the potential for this to hurt earnings and to hurt other things. And if that's the case, we're going to see more and more pressure on the equities. Still time to save itself, but right now, starting to look more and more negative. The next couple of weeks going to be big couple of weeks. You know, I think you get into the middle of November, first week of November, middle of November, election's over, and the earnings are pretty much done. If this market's not heading up by then, it's going to be a tough fourth quarter. That's it for tonight. Have yourself a great one. Take care. See you next time. Good night.